Today in the crypto space, we see the market still dipping down. Bitcoin down to about 62,000, down approximately 2.5%. Ethereum right around that $2,500 mark, down approximately 4.5%. And the rest of the crypto space, these altcoins are coming down as well. Good buy opportunities throughout the market. In today's video, I want to talk about the general market. I want to use Bitcoin as a leading indicator, but more importantly, I want to talk about one altcoin, one project that is at a good, healthy risk-to-reward ratio opportunity, and that project is called Kadena. So let's talk about the news. Let's analyze the charts and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities, whether we go up or down, bearish, bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 8 PM EST, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover here on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, let's begin. Let's see what's going on with this market. Let's scrape through the top 100. We see that the overall market cap has been dropping while we're getting an increase of volume, a slight increase of volume. Not a good look, because that means there's a bit of market consensus that the sell-off is needed. The market believes in the sell-off, so we're getting a bit of sell pressure. Yes, the market cap is down 3.6%, but we're still above the $2.2 trillion mark, so still not too bad. We are getting a bit of a dip here. Retracements are meant to be expected, right? We rally up and then we get retracements. Retracements are part of the game. We buy the dips and continue to the upside. I mean, that's the biggest question. Are we eventually going to see a continuation back to the upside and start breaking above previous levels of price action? Bitcoin kind of rolling over here. Ethereum taking a bigger beating than expected. Of course, we could see at this current moment the Bitcoin dominance still showing strength, given the fact that we can see the altcoins, particularly the strength of Ethereum coming down at 4.5%, means that it's going to be dragging down that Bitcoin dominance. Bitcoin is going to be taking over, and Bitcoin dominance is definitely in favor at this current moment. So at the end of the day, the relationship between Bitcoin and altcoins at the current moment is heavily reliant on what Ethereum's doing, because Ethereum at the current moment is down 4.5%. That's significant, guys. If you look at the rest of the space, we do see other altcoins dipping, but not as much as the Ethereum narrative. If you look at staked ETH, of course, and if we keep on coming down, wrapped ETH, of course, but AVAX is still doing okay. And if you keep on coming down, anything to do with ETH is coming down. Chainlink is rolling over a little bit. Bitcoin Cash is coming down. Polkadot taking a bit of a hit. And as you can see, the market is in a scenario where, there's a bit of red, but mostly geared towards Ethereum. Uniswap, of course, the main DEX for ETH, and we have wrapped ETH again, another dip. Even though the market's dipping, Caspa still holding strong, going sideways. This is a sign of strength, so we got to be looking for opportunities where we see strength. Ethereum Classic taking that dip. And that's the thing here, guys. We need Ethereum to kind of wake up. We need Ethereum to show us some strength. Why? Because its market cap is so large that when it takes a hit, it's going to affect the Bitcoin dominance. In fact, giving the strength back to Bitcoin, which is not what we want to see in this phase of the cycle. We want to start to see an altcoin season. We want to start to see, the altcoins wake up and start to play that catch-up game with Bitcoin. And obviously that will potentially introduce a bit of capital into the market cap, because as the retailers see these massive potential gains that we can get out of altcoins, they're going to start to come in and start looking for some opportunities and showing some interest in the crypto space. So these are things that we kind of need. We need this market to start turning around, particularly the altcoins. Now we do see some of them dipping down. Of course, you can see them. Some of them in the last 24 hours have approximately down 5%, and then randomly you have Floki up 5%. So you do have some some random good gainers, some project holding holding steady, like exchange token BGB Bitget token doing pretty good, at least going sideways. And that's the thing here, you know, when you see exchange tokens show strength, you know that the market's getting involved, right? You know, look at these Ethereum projects just coming down. Of course, they're pegged to Ethereum. Everything's coming down. KuCoin kind of going sideways with a bit of a dip. Gate took a bigger beating in the last little bit, so that's a bit interesting there. What else do we have? Altcoin, based off of the Ethereum, the Toncoin Telegram narrative, Altcoin and Ton are still dipping down, guys. You know, double-digit dips, in my opinion, are meant to be bought. Consider the opportunity. I will be building positions upon structure, and for me that's an important thing so that I can get in from a healthy risk to reward ratio opportunity. Guys, the market in general is, you know, dipping down. As you can see, some projects are not doing as bad as some others, so we got to really weigh out our options here and pick the opportunities very, very critically. Ultimately, we see Bitcoin, Ethereum doing their thing, and we just got to be patient here, because I think patience will get rewarded. All right, guys, let's begin. Let's take a look at some of this price action. Let's begin by looking at Bitcoin. Bitcoin, at the end of the day, is in its typical range, its typical structure, a descending, broadening wedge that ultimately is looking for some sort of move. We got to break the structure one day, guys. We can't be staying here forever. At the end of the day, as we consolidate, as we contract into this zone, eventually we'll get into an expansion. But the question is, are we expanding to the downside, picking up some more bullish bids, or are we going to expand to the upside and start reaching all-time high price discovery and all that bullish sentiment that is the market deserves at this current stage in the cycle? Let's look at this in a little bit more detail. Ultimately, what we can see is that Bitcoin's taking a dip, and that's totally fine, because the reality is we rallied up from $49.2 thousand all the way up to about 65,000. Very good move. And in between, we do expect pullbacks, the same way we got a pullback right into here, right? And then we got another leg up, and then we get another pullback. As of we speak, we're getting another pullback right now, and then maybe we go for that next leg up. In my opinion, that's usually what happens here. The trend is your friend. We can see a bit of a trend here, higher highs and higher lows. And who's to say that we won't get that? And nonetheless, who's to say that we won't respect this trend line once again? At least come and touch it or get close enough to it so that we can make some critical decisions. Do we get, take some profit, or do we prepare for some consolidation here for a bull flag or something like that right below the horizontal resistance? Do we, break out, back test, and spring to the upside and get into price discovery? All this is very possible, but in the short term, guys, nothing is really that bad here. I know there's a little bit of negativity. In fact, I think that Ethereum is the one that right now is posing a lot of fear into the market, right? Because of its strength that it has. And this is something that I've been explaining and try to, really express, is that although a lot of us want to move on from Ethereum, the reality is the market cannot. The market can't afford to abandon ship on Ethereum at this current moment, because if it doesn't, the market cap that it has is too large just to kind of ignore it. It's the only one that can actually sway the sentiment from only a Bitcoin narrative, which up until now Bitcoin has been doing so well, into an altcoin narrative. We need Ethereum to show that Bitcoin dominance, that ultimately the altcoins are going to be taking their turn. And the only project that has the market cap to make that shift is Ethereum, right? Not even if you added up the market cap of all the top 20, excluding stable coins, does those group of projects have enough strength to match up with Ethereum? But this is the thing here, guys. So we kind of need Ethereum to show some strength here. While Bitcoin is dipping, Ethereum is dipping even worse. So we do expect right now Bitcoin dominance, potentially to be in the favor of Bitcoin still. Right, so this is one thing that concerns me. Ultimately, we are still okay with the market structure within a descending, broadening wedge. We do see that on the daily, we have EMA still facing up on the trend, still okay. It does look like it wants to roll over, but there's no confirmations of that yet. So don't try to front run it. Wait for confirmations, and you can see that overall the momentum hasn't gotten overbought or even reached the previous level of overbought conditions that it was on the daily. Now, on the 4 hours, a different story, because the 4 hour, definitely volatility is pushing down. We do see a bit of an expansion forming here on the 4 hour. We've had expansions like this in the past that were very immature, and it could be that we get another immature one as well. While we see volatility come down to oversold conditions, when are the bulls going to take their shot and respond? Now, I do see here on the 4-hour, that the purple line, which is the momentum, and the yellow line, which is the average, they're too far away from each other. And this is what I like to call a mean reversion, right? We could get a mean reversion play where we see the purple line catch up to the yellow. We know historically the purple and the yellow love to stay close to one another, and whenever they kind of separate, they get back together again. So at this point, I do see them a bit far away here on the 4-hour. So we kind of want to get them back together, and that we could expect a bit of a bounce off of Bitcoin, especially as we hit this horizontal right into this level. We do have on the 4-hour, a lot of volume picking up in this zone, previous highs in this zone. It would be a perfect back test as a confirmation and for that continuation to the upside. Now, if we come down and start breaking through these levels, we're hunting liquidity. People are going to start to potentially capitulate at this level. And then the question is, how low can we go before we get that reversal? Do we make another lower low? What's happening here? But ultimately, as of now, we're still holding up pretty okay, and there's nothing really to be worried about, because we can see that at least the volatility is oversold. And when we are in oversold conditions, you can backtest this and look at oversold, oversold, oversold. Every time we get oversold, we get a rally. We get oversold, we get a rally. We're oversold, we get a rally up. And every time we get there, we get oversold, we get a rally up. Now, it doesn't have to go for a higher high. I'm not saying that, but just give us a bullish response. We want to see the bulls and what kind of response they give us, because if it does give us a higher high, that means, guys, we're going to confirm this trend. We're going to confirm this pivot point for Bitcoin, and ultimately confirm this horizontal support once again as support, where we can start bouncing and springing right off of it, showing us some strength. Remember, this thick white line is a super important level, 60,500, and we want to get some support around here and get that spring, because that's the confirmation of a continuation that we're looking for, similar to like what happened here, right? We want that bounce off of it around the general area, and then we can spring to the upside. If we break below, look what happens. We could come down for a lower low, and it's not a good look. That's not what we want here, guys. We want to hold this horizontal. We want Bitcoin to get to about 72,000, and if Bitcoin runs to 72, these altcoins are going to melt faces. All right, guys, so let's jump right into Kadena. Kadena's a project that I've been tracking for the last little while. It was a project that I was very interested in the previous bull run. It did very, very well in the previous bull run. As you can see, we got a nice good amount of price action all the way up here. This was the days of profit taking, where for me it was a good opportunity to de-risk and take profit. Now all of a sudden, here we are. We're at a level where we're back at the bottom of the range, guys. In fact, we're back at previous bottoms, almost touching bear market bottoms. Yes, if you kind of look at this, there are some hodlers that have not sold. There's levels of price that if you got in at about 31 cents, maybe a little bit higher, it's below the 40-cent mark, it's likely that you're still holding, which is fine. Of course, we got a bit of bulls down there that, are hodling through, that are fundamentally bullish. But ultimately, this level right here is the place to be, right? You can see the yellow box that I put in here. I'm like, guys, this is the time to start building positions. And as we got into it, I kind of obviously show a lot of patience, obviously give it some time. Don't rush. Obviously, that all means the same thing, but you get what I mean. Like, we really want to let the price action come to us, let the trade or the scenario come to us. And to be honest, we're a little bit early still, but I feel like it's better to stay one step ahead and prepare. Particularly that, I want you guys to be empowered with your own decision making, and ultimately realize that right now, risk to reward ratio for Kadena is absolutely perfect. Now, I'm not saying that it wasn't a pump and a huge dump. It was, and it looks bad that it did that. But the reality is that it was a new project that came out. Lots of volatility, and then all of a sudden now it's about, where are we going with Kadena? Are we finally going to get a nice pop to the upside, make another higher high, and start looking for all-time highs and price discovery? And you can see, based on what I just showed you, price discovery is way, way above. Like, there's a lot of price action that needs to be basically reclaimed all the way back to about $32, $30. From where we are right now at 50 cents, more or less, guys, there's a lot of X's to be made right here on Kadena. So let's not get too greedy here, but ultimately what we have to understand is that risk to reward based on current entries are perfect, because your invalidation is super, super clear. So let's focus a little bit, right? We do see that this thick yellow line is an important line, because if we break below there, basically what we're doing is hunting liquidity at previous bear market bottoms at 31 cents. That's where the majority of the liquidity is. Again, just as a reminder, it's all the way down here, a bit of volume down there, but the majority of the volume is right into this area. And the reason being is very clear. Look left, look at all the price action. a lot of market participation happening here on the volume profile, a lot happening. So let's kind of exclude the previous bull run and just focus on what has been happening here in the last little while. With the dip, descending wedge, we broke out of the descending wedge perfectly, like absolutely great. And then all of a sudden we're retracing, coming back down to the previous low and hopefully confirming it as support. We did get a swing failure, which means that on lower time frames we broke the horizontal, the previous low, got a couple people wrecked because a lot of people had this mentality of putting a stop loss nice and tight underneath previous lows. That's a typical thing, right? Of course, and it happens to the best of us where we get stopped out. But once that happens, you know that the liquidity hunt was done, the stop loss hunt was done. And if you get on the 4 hour, you can see what happens, where we swing below, slightly below the horizontal support, get a couple people wrecked with a bit of volume, we get back up, back test, and then spring. And this is a good sign that, you know, maybe the liquidity hunt, the manipulation is over. And that gives you a bit more confidence that maybe it's time to start building a position, right? You can see that it is a lower low, no doubt. You can see that it's a bit of a W formation, no doubt. You can see that above, you do have a bit of weakness, right? A bit of an indentation here in the volume gap, suggesting that if it does break above the previous high, we can snap to about 86 cents, which is going to be great to induce a bit of FOMO into the market. People are going to be like, dang, am I missing out here on Kadena? Should I be buying in so that we can, you know, expect it to start reversing in this big picture structure that we're getting with this bigger double bottom, one bottom here, and then we start looking at bigger picture structures. Maybe this becomes a huge W, like, you know what I mean? Like this could be a massive W formation and eventually, you know, start looking for that reversal pattern, like right into here, big W, right? And this being the neckline, and then we start breaking, and then we have volume gaps above. Look at that, all the way up to about $5.37. This is what people are going to start to expect to happen once we start seeing impulsive moves on lower time frames and at lower levels, which is where we are right now, this level right here. As soon as we start changing the character in the price action, the FOMO will kick in, guys. And that's the thing. It doesn't matter about the fundamentals at that point. At this point, we're going to look at price action. People are going to be seeing the gains in the price action, the pivot, and it's possible that happens. Now, of course, I'm sounding really bullish right now. And keep in mind that here on the channel, we focus on bearish and bullish scenarios. It just so happens that the bullish case is very clear. We stay above the thick yellow line, we're bullish. We break below and even backtest and confirm and get rejected off the horizontal, guys, it's not a good look. We're coming down, like I said, 31 cents. But as of now, especially after the swing failure, we can kind of feel like a bit of confidence that, look, we're not coming down anymore. It's very likely that we don't. Now, what we need is a change of character, like I mentioned. Okay, so let me show you what I mean here. And I'm going to kind of clean up this chart just a little bit as we go along. I feel like this yellow box is no longer valid. This is a DCA zone, very clear. We should be accumulating with this area. Just understand that this is also the volume gap. What we do need is a higher low or a higher high. This is the high that we're worrying about, okay, that we want to break above. We are currently maybe working on it, maybe not. If we do get rejected at the point of control right now, we can come down and make a higher low. Great, let's make that higher low, guys. And right away, as you see that happening, you can see that this would start to look bullish, right? Inverse head and shoulder. Good stuff, right? That's what we want to see. Now, what about if it doesn't? What about if it keeps on going up and it breaks above the previous high? It is likely that it flies through the volume gap. Okay, the only issue that we have is we have the 200 daily there to act as resistance, and if that acts as resistance, we could get rejected there again. But like at this level, which we're at the top of the volume gap, or at the 200 daily EMA, we could get rejected and back test this high or the horizontal, which is the bottom of the volume gap. We can back test it and spring right off of it, if you know what I mean. So really what we want to do is get an impulsive move right now and break the previous high and confirm a higher high, because that would give us an indication of a change of character, because no longer are we making lower lows and lower highs. We are finally going to be making a higher high here, which is really, really good. And once we start making that higher high, even if we get rejected on the 200 or the top of the volume gap, that's all good. But if we back test and confirm with a higher low, guys, we're making higher highs and higher lows. And that's what we want when in a trend reversal structure, a pivot point structure. And then this is going to start to look super bullish, because again, we will be looking at this as a bottom. we'll be looking at this as, the final double bottom, the final W breakout that we could be looking at. Breaking above this high is a massive W breakout that, again, could take us above $5 zone. So I'm looking at it at big picture, not just lower time frames, because on lower time frames, right, there are some good moves to be made. But right now, in my opinion, obviously not financial advice, we should be looking for building positions in projects that you are fundamentally bullish on. And at this point, Kadena is a great contender to potentially see some previous price action being reclaimed. Let's take a look at some of these oscillators. You can see the volatility is definitely overbought. What about if the volatility comes down and gets oversold? I get it. We would get a bearish test to the downside, and in that case, we want to see a higher low. If on the bearish response, we do not see a higher low and we make another lower low, we know that the bears are still in control. We're making lower lows and lower highs. We continue the trend to the downside. Fine, no big deal. At the end of the day, the best risk to reward ratio opportunity is as close as possible to invalidation, right? So, which is the yellow line. Let's continue going. We can see that the momentum hasn't gotten overbought for a good while, where it did get oversold twice, even 3 times without testing an overbought state. That means that we're overdue. It's due to get overbought. We were overbought here for a good while. Then we came down and got oversold for a good while. Now is it likely for us to get overbought for a good while and then oversold? You can see the green expansions, the red expansions. We shift, they take turns very nicely. Bearish, bullish, bearish, bullish. It seems like at this state, it would make most sense to start thinking that a bullish response will begin. Let's take a look at the trend oscillator. You can see the EMAs facing up, green histogram bars. You see the purple expansions in the background right here is forming. It looks like it wants to go for a run. And at the same time, you see that the previous expansions to the downside are getting multiple drives of bullish divergence. Each time we get a impulsive move to the downside, the expansion is weaker and weaker, suggesting that the bears are not as strong as they were. And of course, if you go back to the momentum oscillator right here, which is the if you look at the expansions of momentum, this expansion is nice and strong, whereas this last one is super weak. This is class A bullish divergence. What you are noticing right into here, where you see price action. Let me put a long line right into here. You can see the price actions making lower lows and lower highs. Exclude the wicks, guys, when you're doing these divergence analysis. Okay, so I'm just going to put that in right now. You know what? Well, let's make it a little bit thicker so we can make it easier to see. You can see that we're making lower lows and lower highs, and that is happening. We do see that the momentum is also moving to the upside. That's class A bullish divergence, and you also can see the expansions in the background also doing the same thing. So these divergences at horizontal support levels should be taken seriously, because you're at critical horizontal levels showing divergence. And in addition to that, I'm not going to ignore the fact that the trend is also diverging over time. And again, this is a sign that maybe the bulls are trying to get, the strength back, trying to build up their courage to respond. And as soon as that happens, guys, this is where we're going to see a nice reversal. Now, again, like I mentioned, it could take some time. We could also come down for a confirmation low right here, a higher low, and then, come up for an attempt of the break of the previous high, maybe even consolidate here into a bull flag and then continue. So patience definitely is necessary here. But in addition to that, you never know, this thing could break out, backtest, and continue. We don't know what happens in this market. All we want to do is prepare for all the possibilities. And I do see a great statistical probability that we see Kadena form a bottom at this level. But again, invalidation is very important. Okay, so let's talk about the bearish case scenario, because obviously we need to have a thesis for both. The bearish case scenario is not that scary, because that you can put a stop loss, a triggered stop loss right around the zone. Obviously, it's up to your risk tolerance. It's up to your your own economic status. You got to figure out what type of risk you're willing to take, but at least you know how to mitigate it. You put a stop loss below the last wick down here. You put a stop loss right around 30 cents. It's up to you how much you want to lose, right? How much you're willing to lose based on your risk tolerance. And that's all about risk to reward, and it's all about understanding that if we get in right now and we put a stop loss down here, hypothetically speaking, that's a 50% dip, no doubt. But we're talking about bullish runs to the upside for the bull run for the altcoin season. And let's say that it just gets here. Forget all-time highs, forget price discovery. Risk to reward ratio is 4.8 to 1. It's 238% to the upside. We're talking about massive gains here, guys. We're talking about massive gains, and I'm not even talking about breaking through this big picture volume gap. Just look at all this weakness right into here. Previous price action went straight up and straight down. No consolidations in between, which means that once we get to this level, we are going to be hunting to break through this resistance at 250 and snap to $5.37. So you can even feel that no matter what, even though I'm trying to talk about a bearish case scenario, I always lean towards talking about bullish case scenarios, because really the bearish case scenario is so easy to mitigate that, you know, just put the stop loss. You can wait for that dip, for that right shoulder, improve your entry. Now your risk to reward ratio is much better, and you're only losing 40%. Now consider, I know 40% sounds a lot, but just make sure your position size can handle it. If you get in with $100, that's only a $40 loss. All good, right? You move on. Now, if you get in with $1,000, things start to, you know, get a little bit more exaggerated. $1 million, you get my point. So make sure that your position size, you know, reflects your, you know, risk tolerance and what you're willing to lose here. You know, only get in with you're willing to lose, and make sure you put that stop loss to defend yourself. And even with the stop loss, guys, I put it down below this previous low down here from previous bear market in 2021. Guys, we have to understand that we could also put a stop loss up here, you know, be a little bit more, you know, current, let's say, and put it right at this level. You're asking for, you know, maybe comes down to hunt liquidity again, but at least your risk to reward ratio improves and your loss is only 28.8%. You got to make those decisions. But ultimately, I feel like this zone, right where we are right now, is a critical level to start, you know, coming up with a setup that could definitely build you up a position for the up and coming bull run. Alright guys, if I've offered you any value in this video, do the channel a massive favor, slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description below. Feel free to join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. Take care guys, have a good one, and don't forget, buy the dip.